It has been a full year since I started dividend investing, and in this video, we're just going to be talking about how that year went, if I made any new dividend income from my previous video, any buys, any sales from the portfolio. But right before we do get into that, I want to say I appreciate you for even clicking on this video. I want to say thank you as well for getting me to 200 subscribers, and if you haven't already subscribed, I do recommend you to subscribe because I do post daily shorts about the portfolio on any buys, any sales, or any new dividend income that I do receive in the portfolio. So if you haven't already subscribed, thank you for hitting that subscribe button. It will be greatly appreciated. Also, one more thing. If you got any questions, comments, or critiques about the portfolio, put them down below. Let's have a little bit of a conversation. I respond to each and every one of you guys' comments, all right? So let's go ahead and get right into the holdings now. So I hold a total of 15 different positions, technically 14. The reason I say that is there's 3 ETFs that I currently hold, and 2 of those 3 ETFs contradict each other, which is going to be VOO and SPY. Those are the 2 ETFs that contradict each other. They both follow the S&P 500. One just has a higher expense ratio than the other, and that's kind of just how I started the portfolio. I really haven't made a time frame on which one or when I will sell one, but I know I'm going to sell the one that has the lower expense ratio, which I'm pretty certain is VOO. So I'll keep VOO and get rid of SPY for having the higher expense ratio. And yeah, so like I said, these are all my holdings. 15 total positions, 3 of them are ETFs, the rest are individual stocks. You can go ahead and pause the video here, take a look at them. Like I say, if you got any questions, comments, or critiques, anything that I should add, anything that I should subtract from the portfolio, put it in the comments below. Let's have a little bit of a conversation. So in this first column here, you can see the amount of shares I hold for each and every one. You can also see my average share price for each and every one, and also my cost basis, which just means how much I have invested into each and every one of these holdings. Like I said, pause the video if you need to, but we're going to go ahead and move on to my dividend income. So I don't make really too much dividend income in this portfolio just yet, right? I'm just now starting out. It's been a full year, and it's been a little bit of a roller coaster, right? So right now I'm projected to make $35.07 in total if I stop investing right now for the remainder of this year, right? But that number will continue to grow. If you haven't checked out my previous video, you can see that this number was around $33, $34, and now it's up to $35, right? So as long as I continue to invest that $200 a month that I do on a monthly basis, this number will continue to grow, and my dividend income will also continue to grow, right? So total that's been paid out for 2024 is currently at $20.76 that has been paid out to me that I have received and reinvested, right? Also, pending income, that's just saying how much more dividends that are meant to be paid out to me for the rest of the remainder of this month of September. And if we hover over here, we can see it's going to be Lockheed Martin, Home Depot, and S&P Global that's going to be paying me out for the remainder of the year. And then also estimated income, which is just pretty much adding it to the paid income. That also will grow as well, just as much as the total income, as long as I continue to reinvest and reinvest the dividends that I do earn and keep on investing the $200 that I do deposit into the portfolio. So those numbers, the estimated number and the total income number will always change. They will always grow, never shrink, right? And then also, if you're curious on how much I make monthly in dividends, it's a total of $2.92. Like I said, if you haven't watched the previous video, you can see this number has grown as well. It was at $2.80 something cents. Now it's at $2.92. You may be like, that's not paying anything off, but it is, right? I'm gonna explain to you how. So M1 Finance is the platform or the brokerage that I do use for my investing, and they do charge a platform fee for using their platform if your portfolio is less than $10,000. So if you got more than $10,000, you don't have to pay. If you got less, you got to pay it, and it's only $3. So sooner or later, my dividend income on a monthly basis will be paying off that, the M1 platform fee, and I can claim that dividends are paying something off, right? It's nothing nothing big yet, but hey, it's proof of concept to me. That's why I continue to dividend invest. I haven't set a firm goal on where I want to be, but I know I don't want to live off of dividends. Whatever lifestyle I have at the time, that's just going to depend on how much I need to make in dividend income. But as long as I'm seeing the proof of concept, as long as I'm seeing the growth, I'm going to continue to invest in the companies that I do currently hold and keep on growing that dividend income as a goal. That's one goal, just continue to see it grow, right? And I'm achieving that goal monthly, daily, weekly, however you want to say it, right? So that's my dividend income. That's my holdings. If you made it this far into the video, I want to say I greatly appreciate you for even being here. If you haven't already subscribed, think about it. You know, I post the daily shorts about the portfolio, and I post every 2 weeks about the portfolio as a long form video, right? Greatly appreciate your time, and we're still going to continue on, right? So let's talk about the performance of the portfolio before we get into what I'm planning on doing, on what I'm planning on buying, if I sell anything, so on and so forth. Right. So right now, year to date, in the year to date time frame, we're currently in the green by 15.75%. If we go here to this tab here, this is the S&P 500, and if we look at the year to date time frame, we're currently outperforming the S&P 500. It's currently in the green by 14.03%. Right. If you check back 3-4 videos ago, we were down about 6-7%, trailing the S&P 500 by that 6-7%. We figured out, I would say we, but I kind of figured out what was the reason, and the main reason that we were trailing down so much was Vici. Vici's actually come back a very large amount. Let's actually look at it here. It would be better visually. So Vici was down at least 13-15% year to date in the past 6-7 videos ago, if you want to check that out. Main reason is because interest rates really haven't had any fluctuation or any say on what's the plan in the future for the interest rates, right? And Vici's a REIT, so interest rates do control the stock price, controls the company very much. So, right, that's just pretty much one of the biggest things that controls Vici's from going up versus going down. So right now, year to date, we're currently in the green by 20%, and I'm pretty sure that's including dividends. I wouldn't be surprised because I've made a total of $4.65 in earned dividends from this company. But right now, if we go here to this platform that I also use, which is what is called Qualtrim, made by Joseph Carlson. What's it called? This is his platform that he made. It's very visual, appealing to me. Easy to look at, just at the, what would you say, the front end, the first page of a company, say it like that, before I go in depth on doing research if I want to add to the portfolio or not. But other than that, let's get right back into it. So right now, Vici's currently in the green now by 2.48%. Yeah, the S&P 500 is up 14%, and Vici is only up a little bit under 3. It still grew a lot more, right? What's it called? It recovered, not grew. It recovered from the start of this year, just trailing down. Like I said, a total of like 15 to 12% in the red before, while we were trailing the S&P 500 about 6-7%. It's pretty much recovered, right? Right now, I'm holding off on buying any Vici just right now. I kind of wanted to go back down to like the $29 stock price is what I'm looking at, but I have no problem at it being at 33. I haven't bought any new Vici recently in the past few months, but right now I'm just keeping it on my radar, but not executing on it just yet. So yeah, Vici's recovered. The portfolio is back outperforming the S&P 500. I wouldn't say I was nervous. I just figured out what was going on. Followed my thesis, and if I was still strong in my thesis in Vici, I would have never kept the holding throughout the whole year, right, when it was down 15-14%, right? I'm not here to make gains, market gains, of course, on my holdings. I'm here for the dividend income, so I can sooner or later be living off of dividends in the future, right? So now, year to date, we're in the green, outperforming S&P 500. Yes, it's not a large margin, but it is a margin. So that means I'm doing something right. Sooner or later, probably later this year, we'll be outperforming by 5-6% is what I'm hoping for. Anything over that, I'll be pretty good. I'll be pretty happy with, right? Yeah, so like I said, it's been a full year of investing, and I'm not really too upset about it as well. For the whole year since I started investing, which is technically September the 5th, but the 5th was a market day, and I didn't want to make a video that day and then be another market day the next day, so I wanted to just make it on the same schedule that I always do. But since starting, like I said, we're currently in the green by 29.15%, so almost 30% in a full year of investing. Like I say, I only do $200 each and every month into this portfolio, 30% on my money. It's not bad at all. Better than letting it sit 5% in a high yield savings account, right? Yeah, so let's go ahead and check out the monthly time frame. So this month, portfolio's in the green by 3.91%. Let's go here to the monthly time frame for the S&P 500, and it's only currently in the green by 1.68%, right? Still outperforming in that aspect, that time frame. Sooner or later, like I said, my goal is to be ending the year off 5-6% outperforming the S&P 500. If I'm outperforming the S&P 500 at all, I'm gonna be happy with that, right? Not by 0.01%, I wouldn't be. That's pretty much the same thing, but at least by 1-3%, I'll be happy with that, right? Monthly time frame, we're still outperforming, and like I said, on Friday was a market day for the portfolio, and we were down in the red 1.10% on that day, which for the S&P 500 was currently in the red by 1.73%. So we outperformed on that day as well. So portfolio's doing well. continue to outperform this P500 is what I'm really looking for in this portfolio, right? Most people recommend newer investors just to go strictly into ETFs, which I agree with, right? But I wanted to take more of a risk into some companies that I felt really confident about in investing in for the long term, not meaning changing up the portfolio by much. If you go back to some of my older videos, you see I've gotten rid of about 2 or 3 companies from this portfolio before. I think I had around 17, 18 holdings, and now we're down to 15. So yeah, I'm slowly just making sure, realizing if anything in the portfolio is too much of a high risk for me, anything that's bringing it down, so on and so forth, right? But yeah, that's pretty much how the portfolio is going. I haven't put out a buy order just yet. I kind of want to see how this week goes, so I'm planning on saving my cash, which is $110 that I have available to me that I can deposit that or invest that money into my holdings. But right now I want to see how the week goes. You know how people say September is one of the worst months in the stock market. I want to see how that goes, see if we can get some buying opportunities at a lower price that they're currently at now. But just to give you guys an idea, of course, I'll invest into my ETFs just like I usually do, no matter what the price is or anything like that. So ETFs will get invested into. Don't know how much just yet, but I know that's one thing that will be getting some money invested into. Now my tech section, my tech holdings, which is only I think 3, right? Yeah, Intuit, Apple, and Microsoft. I'm gonna be holding off on Apple. I think Apple's a little bit not overvaluated, but it's a little bit of a high price right now, just because people think it's but it kind of is the biggest AI play in the future to come, and I think that price is already accounted into the stock price right now, and earnings are kind of not slowing down, but they're not growing fast enough to where the stock price is right now, in my opinion, right? So I'm holding off on buying Apple. Microsoft, I will be buying some more. Intuit, I'm taking this opportunity as a buying opportunity that I should have did last year with Costco. Costco was around $500 a share, and I wasn't putting much into it, and now I'm looking at it now with Costco stock price almost at $900 now. If I go look at it really quickly, yeah, Costco's at $876. I think it was at $890 at some point, but yeah. So I'm not buying any Costco as well. It's a little bit of a very high valuation for me. My buying price right now for Costco is in like the 600s right now, so I'm gonna hold off on buying any. That's where I'm looking to buy Costco at as well. High 6s. Anything under that is buy with Costco. But right now I'm holding off on buying any of that right now. And yeah, Microsoft, I'm also going to be buying some more, holding off on Apple and Intuit. I'm just going to take this buying opportunity and just keep buying some more into it. Right now, it's my largest holding at the moment, but I think that is a good play by me. I see in the future by growing a lot more than what it is right now, right? So my finance holdings, I think I got 3 as well. Yep, S&P Global, MasterCard, American Express. I know in my older videos I talked about adding Visa into this portfolio, and reason I haven't done that, or I'm not going to be doing that, is because then I'll be just having every creditor in my portfolio, which isn't really going to help me outperform really. So I just went on and said, okay, out of these 2, which was MasterCard and Visa, which one is better, right? I went on and chose MasterCard. So I'm going to continue to invest in MasterCard. Visa is a great company. I have no problem with Visa. Yeah, I should take the gains, but instead of putting my money in separate places, let's put it in one place. That's kind of my mindset in some of my holdings as well, especially my REITs, or my REIT, which is Vici. Instead of investing into Realty Income or AMT, I forgot the full name for it, but AMT, I feel like Vici is the better opportunity out of both of those REITs. I don't feel like adding both of those REITs will outperform my portfolio than what it is already doing now. And yeah, so that's pretty much the same thing, my same thought process when it comes to Visa and MasterCard. So chose MasterCard over Visa. I'm going to continue to invest in MasterCard. S&P Global, I'm also going to continue to invest into as well. I just want to drop down just a little bit more, really. Other than that, American Express, I also want to invest some into it as well. I think American Express dropped about almost 4% recently. Yeah, 3% on Friday. Yeah, so I'm gonna see if it continues to drop. Like they say, September is one of the worst months for stock investing, which pretty much makes it a better buying opportunity for other people. So I'm gonna see if I can get that one to come down just a little bit more, and I'll invest some more money into that. So pretty much all my finance holdings, I'm going to continue to invest in those in my next buy order. If I can get all of them, I will. If the buy opportunity doesn't work out, I can get 2 of the 3. I'm still gonna execute it as well, right? So my industrial stocks, I really haven't paid too much attention to these. I haven't really invested too much money into these recently. There's also 3 holdings in here, but I'm gonna put some more money into Caterpillar. Caterpillar is just catching my eye right now. What's it called, investment wise, they grew their earnings, so they did beat on their earnings recently. So I'm gonna let that come down as well. See how the September, what would you say? Not ceremony, but you know the way people think of September as being the worst month for stock investing. I'm gonna see how it plays out. If it plays out the way I want, I'm gonna put some more into Caterpillar. I think I'm gonna hold off on Lockheed Martin and Waste Management just now. I want to grow the Caterpillar holding just a little bit more. Lockheed Martin's been doing pretty good this year. I think it's up about 15%. Let's check that out real quick. Let's see. Lockheed Martin's currently in the green by 24%. My bad. It's in the green by 24% at 5.1 free cash flow yield. So I'm gonna hold off on that one just right now. I don't really know when I'll plan back into investing into it. I kind of want to see when the next earnings report comes out, see how that goes, and it'll let me know pretty much what my plan is for in the future. So right now I'm just holding off on it. Same thing with Waste Management. Just want to see the next earnings report and see how things go. Right, but Caterpillar I am going to be investing some more into. Just waiting for that. See how September goes, and then same thing with Vici. It's slowly coming down, but not as fast as some of the other stocks this September. Right now, I don't mind Vici being at a $33 stock price. I possibly may invest into it if it's around that $31, $30 stock price as well. 29, I'm definitely getting some money into that. But 30, 31 is what I'm looking at for Vici right now. Just trying to get it as cheap as possible, right? Have a lower, what is it called? Average share price for it. But I wouldn't mind the $33 price it's at now, neither. So yeah, so Vici is going to continue to be getting reinvested in. Right now I'm just waiting, holding off, just see how things play out, and then yeah. So my last one, consumers. These are my Home Depot and my Costco. Like I said with Costco, I'm just going to be holding off on Costco. Not going to really be buying anything just yet on Costco. But with Home Depot, I'm going to see how, like I said, September plays out. That's my game plan for most of my holdings. Let me just say that now. See how September plays out this first or the second week. And see if things continue to go down or if things start to rise back up. Yeah, see if anything's in a good value, right? But other than that, that's really it for my holdings. How much is, I'm actually curious on what my average share price for Costco is. 605 is my average share price for Costco. So yeah, I should have really got a lot more money into Costco. This one I was kind of being hesitant on, really, because it's a retailer, of course, and I didn't know as much as Costco as I did then till now. And yeah, I see Costco as a very great company. I want to get more into it, but you know, things didn't play out that way. I'm waiting for a pretty decent drawback in Costco. Not saying that they don't deserve the share price that they're at, but I want it needs to be a little bit more reasonable before I get back into it, investing back into it. Say it like that, right? So yeah, that's pretty much everything about the portfolio. If you made it this far into this 18-minute video, I wanted to try to make it 15 minutes or less. Clearly, I couldn't do that. There's a lot of information in here. And yeah, you know, I'm not good at exiting out videos. But last thing I want to say, I appreciate you guys. If you did make it this far into this video, I appreciate your time. I hope this video gave you all the information that you needed. If you got any questions, put them in the comments below. If you haven't already subscribed and you made it this far into the video, go ahead and hit that subscribe button. Let's get road to 300 subscribers, right? Appreciate you guys for 200 subscribers as well. And yeah, that's the plan for the portfolio. Let's see how the second year goes. Happy anniversary to the portfolio. Happy anniversary to anybody that's been here with me for a full year. And if you're just now getting here, hey, let's lock in. Let's do this next year, 2025. See how that goes. The rest of 2024 and see how the rest of 2025 goes. And yeah, I appreciate you guys, like I always say. And you have a good one. It was good here speaking to you guys. And see you in the next video. Peace out.